Welcome, everybody, to the Equity Trust Virtual Classroom. My name is John Bowens with Equity Trust Company, and joining me in the studio today is Equity Trust client David from Kentucky. Really excited to have David on today's program. David is a real estate investor. He's very active. He is now retired, but started real estate in the real estate investing business many years ago. He owns properties in and outside of his self-directed IRA. So David was gracious enough to join us on today's program to provide some information and education on his experiences, how he's began to develop a rental property portfolio in his self-directed IRA, as well as how he manages his rental properties outside of his retirement plan. So again, he has rentals inside and outside of his self-directed IRA. Also having David join us today to recognize David for being our Investor of the Year in 2019. So congratulations, David. Really appreciate you being on today's program. David, if you're on, can you go ahead and introduce yourself and maybe start off by just telling everybody a little bit about how you got involved in real estate investing many years ago?
Well, thank you for having me, and thank you for the generous award. We started in real estate a number of years ago because my niece was being taken advantage of by a slumlord who was charging her through the roof for a broken down trailer that had no heat and no roof in one of the bedrooms. And so we found a house, bought it for her, and became her bank and helped her to get her life back on track. And then later on, a number of years later, she moved back out of the area and we were left with this house, and we were trying to sell it in a time period that houses weren't selling. And a lady from the church said, "I've got this girl that would like to rent it. Would you consider it?" We said yes. That worked out very nicely, and it just kind of blossomed from there.
And so that was with a self-directed IRA, or that was before your introduction to self-directed IRAs?
That was well before.
That was well before. So that's what got you into real estate investing. And then what got you into using a self-directed IRA to invest in real estate?
It was just an option that came available because of my 401k, and these opportunities came along, and I was able to make quite a bit more money on the rental property as opposed to the stock market. Plus, I was able to get involved in people's lives and be a mentor to them and be a light into their world.
Okay, so that was the start into self-directed IRA investing. Obviously, you had experience in real estate before, and then you used that experience and ultimately translated it to the self-directed retirement plan and begin investing in real estate compared to investing in the traditional financial market. Now, what was your experience up until then? So you had what type of retirement plan before you moved it into a self-directed IRA?
I had a traditional IRA through my employer. I'd been a sales representative for 40 years.
Okay, so you had a 401k, you left there, rolled it over to a self-directed traditional IRA. Now, David, for the audience, so they understand this movement of funds, when you rolled over funds from that 401k into the traditional IRA, was there any type of tax consequences or penalties?
No.
No tax consequences or penalties. So money got moved over. And then when you did that first deal, when you bought your first property with that self-directed IRA, could you walk folks through sort of on a high level what that looked like? How did you get money from the account? How did you work with Equity Trust? How did you facilitate the closing?
Well, all I had to do was with my attorney that did the closing, just have her put Equity Trust with my name and IRA on it. And she worked with you. Your experts were helpful in teaching her how to do it as well. And then we purchased the home, and I would tell my contractors, I cannot pay you out of my own pocket. What I have to do is submit your bill, and then they will send you a check. Everybody seemed to be fine with that. It worked very nicely, and the checks went out very quickly.
Mhm. So for the audience that's listening in here, David rolled over his 401k into a traditional IRA. He then executed on a purchase. And as David had mentioned, he worked with Equity Trust and an investment liaison, is what we refer to them as, to coordinate the entire purchase process. So the titling on the property was Equity Trust Company Custodian FBO, as in for benefit of, David's IRA. So it wasn't in David's LLC. It wasn't in David's personal property trust or land trust. It was his Equity Trust IRA. And then from there, as David described, all of the fix up and repairs were paid for from the self-directed IRA. And then, of course, all rental income goes directly back into the self-directed IRA. Now, last question for you on this segment. David, have you ever had to file any type of tax return, a Schedule E, or any other type of tax documentation, if you will, associated with your self-directed IRAs that own rental properties?
I don't believe so. I
Yep.
take everything to a CPA and she handles it.
Yep. So now the rental homes that you own outside of your IRA, obviously there's tax returns associated with and tax documentation associated with those properties because those are taxable income-based type assets. And then the IRAs are tax exempt, so there's no tax returns or other filings associated with those investments. Great to hear, David. I'm glad you brought up that you take everything to a CPA. Here at Equity Trust Company, we always encourage folks to work with their CPA, their accountant, or other financial professional. We're a company as a custodian that provides education, information, and custody services. But what we don't do is provide tax, legal, or financial advice. And of course, today's program, myself on behalf of Equity Trust, as well as David, we're not here to provide any type of tax, legal, or financial advice. So I appreciate that, David. Thank you so much for the introduction. Do want to pause for a moment and mention again, thank you so much for joining us and the award again of being the Investor of the Year in 2019. And want to mention to all of our audience members that every year, we've been doing this for many years, we have our Investor of the Year award. In 2019, we had over 50 contenders, and David was number one, of course. And we have investors that submit to us on a variety of different investments that they make, from real estate, tax liens, private lending, equity partnerships. Some are real estate based and some are non-real estate based. So for anyone out there that's an Equity Trust client, or if you become an Equity Trust client, keep in mind our Investor of the Year program. We'll send information out to you on that so that you could make your submissions and hopefully be our next Investor of the Year. So David, let's go ahead and jump into the transaction, if you will, that was one of the transactions that you had submitted to become the Investor of the Year. And this is a more recent real estate investment in your IRA, but I understand that this goes back to 2 or 3 years ago that you did your first deal with your self-directed IRA. Can you walk the audience members through this particular transaction, how you found it, how you got it under contract, what you bought it for, how you rehabbed it? Just take us from the very beginning all the way through the transaction.
Well, I got a call from this young lady who was asking for a 4-bedroom house. She told me that her house had burned to the ground and she and her 4 children were living in a hotel and was unable to find a 4-bedroom home. Well, I told her we didn't have any 4-bedrooms home. We only had 3s. And then a couple of days later, she called back and talked to my wife and was told the same thing. And then her situation was put out on Facebook, who was a friend of our son's in Chicago. And he called us to see if we could do something about it. And so I just asked the Lord, Father, is there something about this that you're wanting me to be involved in? And it seemed like it was. And since I had my Equity Trust account set up, I called our realtor and we went and looked at this particular home and liked it real well. And so I called the young lady at the hotel and she came down with a couple of her kids and looked through it and she was delighted. So the next day we just placed an offer on it through our Equity Trust IRA and purchased it. And to make it suitable for her, we did a little bit of remodeling to it. It was a little bit dysfunctional because the to get from the living room to the kitchen, you had to cross a bedroom diagonally from one corner to the next. So we took that bedroom out and made a hallway, a straight hallway into the kitchen, and then used the rest of that bedroom to put a second first floor full bathroom on it. And then the upstairs had stairways that were dysfunctional and completely unsafe. And we tore those out and made that safe again with the proper headroom, and was able to use that space upstairs. We put in a separate HVAC system up there and made 2 nice bedrooms up there. And then,
So on this project here, David, you converted what was a 3-bedroom into a 4-bedroom, and then you also added a bath.
we actually added 2 bathrooms.
2 bathrooms, and then obviously the HVAC system upstairs. $96,000 purchase. Correct me if I'm wrong.
That's correct.
Okay, $96,000 purchase. $47,000 in rehab.
That's correct.
And you have how much in gross rent coming in on a monthly basis?
$1,500.
$1,500. Okay. And so what's your approximate return on investment, cash on cash return on investment on this transaction?
That's 12.5%.
12.5%. Okay. And I think it's important for everybody to understand that when we're talking about the cash on cash return on investment, David bought this property free and clear, all in cash with his IRA funds. So IRA bought it for cash. IRA bought it in cash. IRA paid for all the repairs, all in cash from the IRA. It's important to understand that when your IRA buys a property, your IRA has to finance 100% of the repair costs. So taxes, insurance, utilities, all rehab, all these expenses, correct me if I'm wrong, David, were paid for from your equity trust self-directed IRA.
Yes.
Okay. Question for you, David. I'm putting you a little bit on the spot here, but why didn't you go to a bank or private lender or hard money lender to do this deal? Why did you do the deal 100% outright in cash with the IRA funds?
Because this deal will make a great deal more income for my retirement than what I would get through a stock market. Plus, the value of the house is now much greater than it was and is continuing to appreciate.
And now, David, do you use a property manager to manage the property the day to day, or are you overseeing that yourself as the IRA account holder?
I oversee it myself.
You oversee. Okay, great. And then as far as the expenses are concerned, as you pay those expenses, can you walk folks through what that process looks like and how you access cash from the Equity Trust IRA in order to facilitate the expense payments, and then of course how you get money back into the IRA?
Well, when the contractor submitted me a bill for something he had done, I would just enter that into my website that's in the Equity Trust account, and then they would send a check directly to him within 3 or 4 days. And I have the lady's rent going directly from Kentucky Housing Corporation to Equity Trust. And that's done the first day of every month automatically.
And so the rent payment, you have them sending that rent payment directly to the Equity Trust IRA. So sending it to our corporate offices, and then we're depositing that accordingly.
Yes.
Okay. So as you can see, folks, what David's describing there is using the online, what we refer to as My Equity Portal. So this is an online technology system that enables David to simply log in online, request where the funds need to be sent, and then if they need to be sent by check or ACH direct deposit or wire transfer, and then Equity Trust sends the funds out. Now, in this case, David is sending a check, and that's getting mailed out. But it is important for folks to know that we also have the functionality with the technology system to send funds out via ACH direct deposit or wire transfer. Okay, so great investment opportunity. It's making obviously a significant return on investment. But I do want to emphasize for everybody that this particular transaction, and correct me if I'm wrong, David, this didn't start with I found a good deal and I want to execute on doing it with my IRA to grow my IRA. It actually started with a need of a local community member. Is that correct?
That's correct. This young girl had given me a call, and she needed a place to live, and um, we were able to purchase this home for her.
And then the byproduct of that goodwill, of course, is this over 12% cash on cash return on investment in the self-directed IRA. And as David pointed out, he's making a better return investing in this rental property than he was investing in traditional stocks, bonds, and mutual funds. So thanks again, David, for that transaction. Now that was an IRA investment for everybody. What I now want to do is, David, have us go through non-IRA investments that you've done. And I think it's important for our attendees in today's program to see not only the IRA deals, but also the non-IRA investments that you're holding. Now, let me ask you one question before we jump into that. Do you have a methodology or a formula of how many properties you do outside of your IRA versus inside of your IRA? Or maybe in other words, how do you make a decision on whether you buy a property with your IRA or buy it with your non-IRA money?
Well, it just has been on a case-by-case basis. When I had other funds available, I used those, and when I didn't, I used the IRA.
So in other words, kind of more deal specific, if you will. Okay. So now let's take everyone through this transaction. Can you start with David? Now this again is a non-IRA deal, but can you start with how you found the deal and what led you to that point?
I found this house online. It was listed as a tear down, and I was interested in it because I like providing jobs. So I went to look at it, and we were able to buy it for $11,000. And it was close enough to the highway to where if it had been torn down, they would not allow you to build it back. So what we did was we gutted the thing and rebuilt it from the inside out. And there's probably 3 original boards on it. But yet we added 2 additions to it. We put a garage on it and a 3rd bedroom, and put some concrete floors in it, and rebuilt the outside foundation. And it's a sharp little house now. It's 3 bedroom, 2 full baths.
So here again, another property that you've converted and added. Now this one you added how many bedrooms?
We added 1 extra bedroom. It was 2 bedroom, and now it's 3.
3 bedroom. And then you added a bath as well?
We added 2 bathrooms.
Add 2 bathrooms. Okay. So it's a 3 bedroom, 3 bath.
Yes.
Okay. Outstanding. And then do you have multiple tenants in this property?
No, it's a single family home.
Single family. Okay. So you put a family in the house.
What was great about this house was it had been depressing an entire area for almost 40 years. And the pastor that lives next door was trying to figure out what to do with it because it looked so badly. He told me that they were people that didn't want to come to his church because of this particular home. And we fixed it up and turned it into a show place, and everyone in the entire neighborhood is thrilled with it.
Wow. So found it online. Now, when you said you found it online, David, was that through like an auction, or can you walk us through exactly how that and where you found that deal?
It's a site called LBAR, which stands for Lexington Associated Board of Realtors. And they post homes that are for sale on this website. You can search by area, by price, by bedroom, however you want to look for it. And I just found it because it was so inexpensive. I mean, $11,000, the lot was worth that.
Mm-hmm. And then so that was, can you reference that one more time for the audience? What website was that?
LBAR, LBAR.com. But that's specific to the Central Kentucky Lexington area.
Okay. And so would it be a safe assumption that in other states, for anyone watching that are in other states, which I know there are many, is there an equivalent with those particular states and their board of realtors there?
I would think so.
Okay. So that'd be a good takeaway for folks to research that to find an opportunity for additional investments. Okay, so it just so happened that the property was next to the church of a pastor that you knew. The seller, who was the seller of this house? Was it a probate? Was it estate? What did that look like?
It was an out-of-state buyer or out-of-state seller
Okay.
that uh, had problems with it and just wanted to get rid of it, basically. It did not have a foundation on two sides of it. We jacked the house up, took the block that was laying on top of the ground away, dug a trench, poured concrete, put in new concrete block, and then lowered the new walls back down onto the new foundation.
Mm-hmm. So extensive rehab. Do you have an idea? You bought it for around 11,000. About how much money did you actually put into it?
Probably 40,000.
40,000. Okay. So you're in it for around 52 and some change. And then how much are you renting it for on a monthly basis?
1,200 a month.
1,200 a month. Okay. So if we do our calculation here for everybody, 1,200 a month, would it be fair enough to say after operating expenses, and I understand the maintenance is minimal on these houses because of the rehab you've done, around maybe 950 after expenses on a monthly basis? Would that be a fair number, or do you think it's more?
It would be far more.
I would think with sewer, water, garbage, probably be at around 1,100, which gets you at about 13,200 after all expenses on an annual basis, which is tax exempt in your IRA. And if we look at that on a return on investment, that's close to, as I'm doing the math here, just real quick, David, that's over 20% cash on cash return on investment. Correct me if I'm wrong.
That's right in the ballpark. Yes, sir.
Okay. And I gotta, it's interesting. I gotta chuckle here because David, I really admire and appreciate you because, you've always led with the reason why you're doing the deal. And it never seems to be about the cash on cash return on investment in the figures. It always seems to be for some other reason, but the money always works out in the end. The financials and the economics always seem to work out for you in the end. This particular transaction, it sounded like it was a project to beautify the area. There were obviously a lot of parishioners there that were dissatisfied, along with the church as a whole, of the site of that property. You came in and beautified it, did a great thing for the community. And then you're obviously also doing, a really, really great thing for yourself. So wanted to make sure I recognize you for that as well. Beyond just being our investor of the year in 2019, obviously you're doing some incredible things for the community. And part of that is with self-directed IRAs, which we here at Equity Trust Company really believe in and really appreciate.
Well, the Lord Jesus did not go up to all the trouble of redeeming me so that I could make money. He redeemed me so that I could reflect his light into a dark world. And he's using this real estate in order to do that into people's lives.
Mm-hmm. Outstanding. I appreciate that once again, David. And, those are just wonderful stories to hear for our clients here. And next, last but not least, as far as properties are concerned, and show some folks some ideas of some of the things that you're doing and some of the things that they can implement. Can you walk us through, and this is something we just talked about, so it's absolutely fresh on my mind, so I'll let you take it from here. But can you tell folks about this deal, which I know you like to refer to as the making of a great room deal?
This the chimney that you see was in a wall between the living room and the kitchen. And we removed the wall and tore down the chimney, took out all of the floor substructure, rebuilt the floor structure, then took out the false ceiling that you see, put in the new drywall, new flooring, new kitchen cabinets, new lighting, ceiling fans, and you see the final product there.
And on this deal, what was that total rehab cost?
I purchased this home for $25,000 and I put probably 30 in it, and it's renting today for $1,200 a month.
Wow. That very similar to the last deal. Same
Yes.
rent, about 1,200. And where did you find this deal?
It was just listed as through a broker.
Okay. So another almost complete, from what I look at, it's almost a complete teardown.
No, not that bad. We had to redo all the floors. All the floors were rotten, so we dug a hole every 6 feet from the front end of the house to the rear of the house, stretched a string, poured concrete, laid block, and then jacked the house up to that string, and then supported it with steel shims. So it made all the floors nice and flat and level again.
So these are some really extensive rehabs that you're involved in. Can you walk us through how do you go through that process? And obviously, we know that with a self-directed IRA, you can't necessarily be doing the physical work yourself. Now, of course, David is handling the oversight, so he's managing the contractor or contractors. He's overseeing the transaction. He's executing on getting money from his equity trust IRA through his online bill pay service to those contractors. So he's handling the administrative duties, not the actual physical duties. Can you walk us through, David? What does that look like? How do you select contractors? How do you work with them? Obviously, both in and outside of the self-directed IRA.
Well, that's pretty easy because I only have one contractor other than HVAC, and he does it all. And we've known him for 40 years. He's like a family member to us.
So the contractor, your contractor that you've known for 40 years, you're having checks sent from your equity trust IRA to that contractor. Your contractor is depositing those checks, and then they're using those funds to pay for all of the materials, labor, et cetera, that are going into these properties.
Yes.
Okay. So, and that's really important for audience members to know from a logistical perspective to make it easy and seamless. Is funds coming from the IRA to a contractor, contractors paying for expenses. And then, of course, these are rental properties. So all the rental income is going directly back into the self-directed retirement accounts. David, any other sort of tips or maybe best practices for people that are just getting involved in renovations in terms of working with contractors and renovating properties, particularly in this case for the purposes of renting them out, not so much fix and flip type deals?
One other thing people might want to understand that I particularly like about equity trust is that I'm experiencing a great deal of gains on these homes from what we're buying them for versus what they're worth when we're done. And because it's in the equity trust IRA, when I sell that home, all that's capital gains free. It just goes right back into my equity trust.
So capital gains free. No long-term capital gains. If David chooses to sell any of these properties, there's no recapture depreciation. There's no long-term capital gains tax because it's in his tax-exempt IRA. Just like we mentioned at the beginning, there's no special schedule or tax return for the income generated in your IRA as it's a tax-exempt account. I appreciate you sharing that, David. Other than that, as I look at these houses, the one thing that I'll comment on is these appear to be properties, even though they're rentals, they appear as if you are doing extensive rehab to where you would sell this property as a traditional retail sale. Correct me if I'm wrong.
That's correct.
And I know ahead of time we were talking about your maintenance costs. What do your maintenance costs look like on these properties that you own in and outside of your IRA?
With the 25 some homes that we have, we probably have less than $1,000 in maintenance a year.
And these utilities, everything, I'm sorry, not utilities, everything, but appliances, you're including everything in these houses for these tenants, right?
Yes.
Okay. All right. Any, before we move on, any last comments on these properties that we've been talking about?
It's just a lot of fun. I get up in the morning excited as to what's going to happen today.
Right. And so the other thing I wanted to ask you, David, is, what's been your, obviously there's a lot of payoff to this, and, you enjoy every single day getting up and doing what you do. And I certainly admire and respect that. As a landlord myself, owning properties in my self-directed IRA, it's great to see the money coming back in the account. but there's something about working with those tenants, especially during, very difficult times that we're in right now, and being able to provide a safe home, a home that has all the necessary amenities, and of course, do well while we're also doing good for someone else. What I wanted to, with that said, what I wanted to ask David is, what has been the biggest challenge for you? And I'll first ask the question in terms of just real estate investing in general. What has been the biggest challenge for you throughout the 20 plus years that you've been in this business?
Well, there really have not been many challenges because the Lord God has directed every bit of what we're doing. The landlord-tenant relationship is a very dark world, and God has chosen Kathy and I to bring light into that dark world. The first thing we tell people is never call us landlords. There's only one Lord, and his name is Jesus. We're just David and Kathy, and we are not special because we own property.
Mhm. And so, any challenges that you've had with using a self-directed IRA, and how have you maybe overcome some of those challenges?
The biggest challenge I had, which wasn't much, was convincing our vendor for HUD to send a check directly to Equity Trust instead of sending it to us. They didn't really want to do that.
But eventually you were able to overcome that and get them to send that to Equity Trust directly, correct?
Yes.
And that's very, very common with working with the housing authorities, is having money sent directly into the Equity Trust IRA. And we do have accommodations for that, and we work with clients and work with housing authorities in order to provide instructions to send an ACH direct deposit, or have a check made payable to the IRA and mailed for deposit. So certainly for anyone out there that's looking to do deals where they're going to have a housing authority involved, we have the capabilities and the technology systems set up in order to accommodate those particular transactions. So other than that, so challenges out of the way now, David. What would be the most enlightening or eye-opening moment that you've had thus far in using a self-directed IRA to invest in real estate?
Well, it was a very easy process. It was a learning process at first, but now it's just very, very simple.
And I can attest to that, and especially working with a lot of clients and investors, and actively owning properties myself with a self-directed IRA. The first transaction is different, because you're working with a custodian. Money isn't being sent from a personal checking account or an LLC checking account. It's being sent from the Equity Trust IRA. So there's certainly a process there of learning how to interact with Equity Trust as the custodian using the online system. But of course, as David has mentioned here, you can see the payoff can be substantial. And then, of course, in addition to that, is not needing to have special tax returns or schedules filed associated with the returns on investment. That's money just going directly back into the IRA. So I appreciate you mentioning that, David, because a lot of investors go through that process that you went through, that learning curve. I have as well. And, my goal here as an instructor and as a teacher is to also help shorten that learning curve for people. So certainly for all of our audience members out there, we have a lot of training, YouTube videos, education, home study courses. We have a lot of content out there, as well as our support of our over 400 associates nationwide, to be able to get on the phone with you and walk you through a process, or watch a video and get a better understanding of how it works. Log into your account online and have us walk you through in a tutorial fashion how this process works, and how you can get funds from the account, how you can get money back into the account, so on and so forth. So that being said, David, where do you go from now? So you obviously have a rental property portfolio, over 25 houses. Some of those are in your self-directed IRA. What's the next big adventure for you in real estate?
Well, we still have 4 houses left in Lexington that we're working on currently, that we purchased from a 1031 exchange of selling some older townhomes. So that's what we're doing right now. Until we get those 4 houses done, probably won't be doing anything different.
Okay. And beyond that, beyond just real estate, on a personal level, you're obviously accruing capital, and you're building wealth, and you're preserving wealth as you're using the self-directed IRAs because they're tax exempt. But what do you intend on doing with these assets and this capital? What's the long-term plan for you and your wife, Kathy?
I'm bringing our son and our daughter into it so they can benefit from it, as well as our grandkids. And then we're going to be starting to do some traveling.
And your children now, would that be where they're going to start to take over some of the houses in terms of the management and the continued growth of the business?
Yes.
Okay. And then the grandchildren, what's the plan for them?
Well, they can grow into the business and continue to reap the benefits as well.
It's outstanding. I can't admire enough the concept of legacy planning. And I've worked with so many investors that they have children that want to be involved, and then some that don't want to be involved. So that's excellent that you have children that want to be involved, and hopefully the grandchildren will want to be involved as well. One thing I'll mention for everybody in terms of legacy planning and estate planning is a self-directed IRA, Roth IRA, traditional IRA, solo 401k can be a great estate planning or legacy planning tool. Because see, you can leave your IRA to your children or grandchildren, even skip a generation, skip the children and leave it to the grandchildren. And even while the grandchildren are under the qualified retirement age of 59 and a half, the grandchildren can take money out in a tax exempt fashion. Now, with a traditional IRA, you'll learn that's tax deferred. So when you take money out, you got to pay taxes. So if you left a traditional IRA to children or grandchildren, they would have to pay taxes when they take the money out, of course. But the account would be inherited in a tax exempt fashion, and they could continue to use the account and invest in real estate for 10 years. Now, a Roth IRA, you'll learn about in some of our other training, is funded with after-tax dollars. And you could also convert from a traditional IRA to a Roth IRA. So for David, if he wanted to, he could convert some of his money from his traditional to his Roth, get the taxes out of the way now, buy more properties, create cash flow, and then leave those Roth IRAs to his grandchildren. And his grandchildren, let's say they're in their 30s when David passes away, the grandchildren will pay 0% tax on that inheritance, and they can continue to use the inherited Roth IRA as a Roth IRA for 10 years under the current law. Now, the benefit there is they can continue to create tax-free profit, create tax-free cash flow, and all that cash flow is tax-free to them. So that's just a quick lesson for everybody on traditional versus Roth IRA. And then, of course, the capabilities of leaving those Roth IRAs or traditional IRAs to your children or grandchildren. So keep in mind, if you don't already have a self-directed IRA open and funded, and when you open and fund your self-directed IRA to start, you'll want to make sure that you select your beneficiaries in an appropriate fashion. So David, thank you so much for joining us on today's program. Did want to echo once more for everybody watching, David was our Investor of the Year in 2019. And if you want to be our next Investor of the Year, stay tuned to provide information to us. We will send emails out to all of our clients coming up for 2020 to provide your information to become the next Investor of the Year for 2020. So again, David, thank you so much for joining us today. Any last comments or remarks or tips or words of wisdom for investors out there?
Use rental property to enrich people's lives, and you will get rewarded greatly for it.
Outstanding quote. I appreciate that, David. We couldn't end better on a better quote than that. So I'll pause there and say to all of our audience members, thank you so much for joining us on another program here at the Equity Trust Virtual Classroom. If you have more questions, you need more information, check us out on the web, trustetc.com. You could also check out our YouTube channel. Go to youtube.com/Equity Trust Company. We have a variety of YouTube videos on a variety of different topics, as well as interviews with other Equity Trust clients like David, sharing their experiences and how they're actively investing with self-directed IRA funds. Reach out to us as well. We have agents that work with clients and prospective investors one-on-one to help you through the process, to learn more about how a self-directed IRA could potentially work for you. and then of course to establish and fund your account. Keep in mind that if you want to make offers on real estate transactions, that your account needs to be set up and funded well in advance before you begin making offers on properties. Just like David mentioned, he opened his account, he rolled over money from a 401k, no taxes or penalties. He did this well in advance so that he could execute on his very first real estate transaction, which was about 2 to 3 years ago. So again, David, thank you so much for joining us. Audience, thank you so much for joining us in the virtual classroom. We'll see you next time.
Thank you.